Welcome to another video edition of the Wealthsteading podcast. Today I want to address where I'm at with the Mexican ETF, EWW, and what effects the NAFTA renegotiations may be having on the future of the Mexican economy and consequently on the ETF that I own. Well, let's pull up a chart of the Mexico Exchange Traded Fund, EWW, and you can see that it's had a really good run this year. There was a major pullback following the election of Donald Trump in November of 2016. The fund went through a lot of volatility. I didn't think that could last. I felt that the effects of Donald Trump building a wall and whatever was going to take place with NAFTA was being overblown and overdramatized by the media. And so at the beginning of this year, I invested in that fund. Its performance with the dividend is up nearly 30% since I've gotten into the fund. And right now you can see it's pulling back a little bit and people are starting to ask me, John, do you think that this fund is petering out? Is it time to get out? Well, let's move from the chart and let's consider some fundamentals. First of all, the trade between the United States and Mexico is immense. The U.S. exports $262 billion into Mexico, while at the same time the Mexicans export over $317 billion back into the United States. The two economies are very much intertwined, and in my opinion, it would be really hard to unravel the interdependency of these two countries without a major detrimental effect to either country. About 80% of the Mexican economy, the Mexican GDP, is directly imported into the United States. Mexico is not going to walk away or take an extreme hard line of these negotiations because they have too much to lose. They can't turn around overnight and start shifting their economy so that it favors Guatemala or Panama or trade with China. Economies just can't change and adapt that quickly. So the Mexicans have a vested interest to make this agreement work. On the other hand, despite the rhetoric coming out of the White House and certain political factions, the deficit between the two countries is less than $56 billion. And to put that into perspective for you, even if there was parity and equalized trade between the United States and Mexico, and assuming that no trade was lost, that somehow magically the trade deficit became equal between both countries and we exported $317 billion to them and they exported $317 billion to us. Well, you know what? On the scale of importance of the United States economy, that would mean almost nothing. That $55.6 billion trade deficit that the United States has with Mexico represents just 2.5% of all U.S. exports. It's basically a rounding error. Especially when you compare that broadly to the U.S. economy, that trade deficit only represents about 0.3% of the overall United States GDP. As to the NAFTA renegotiation, I think it's much to do about nothing. Now let's go back and look at a long-term chart of the Mexican ETF, EWW. You can see that following the election of Donald Trump, the fund bottomed out right around the long-term support that was the approximate mid-range of the 2008 financial crisis. So I think that long-term trend line represents a good level of support. We can also see how the price has recovered, and currently we're at a resistance level that's been holding since the collapse in prices back at the end of 2014. So the question is, can the price break through this resistance level? Before I think we can answer that, we have to understand why the Mexican economy was doing so well in 2013 and 2014. And by looking at this chart of the Mexican GDP, you can see that it pretty much tracks what we saw with the price action of the exchange traded fund. So you can see that the Mexican economy has been in a long-term downtrend long before Donald Trump was ever thought to become president. So what's going on here? Well, I don't believe it has anything to do with NAFTA or the effects of globalization, because if you look at the individual sector of the Mexican economy that contributes to GDP growth through manufacturing, you can see that that's been in an uptrend since 1996. And even with Donald Trump in office, the manufacturing base of the Mexican economy continues to grow. So what's caused the Mexican economy to pull back since 2013? I don't think it has to do anything with the production of goods or services. I think it's all about commodities. Now, I don't have a chart that shows all the commodity production in Mexico, but I do have one that represents the mining sector, and it is somewhat symbolic of the overall natural commodities production in Mexico. So you can see how mining in Mexico has been in decline since around 2006, and how it did peak up a little bit in 2013. That's when we got the big growth in the ETF EWW. But you can see that it's fallen precipitously since then, and this in effect is what we've seen across the board with all commodity exporting countries. The good news is that commodity prices are starting to stabilize. Agricultural products continue to decline, but industrial commodities like petroleum or copper, we've seen an increase and a stabilization in their price. So assuming that that continues to hold, and we see the price of oil somewhere between $45 and $65 a barrel, I think that will allow enough room for the Mexican commodity market to be self-sustainable. And so looking back at the price action on the chart of EWW, we can see that those peaks in 2013, 2014 were probably related to commodity prices. And even if commodity prices don't get back to those levels, I think the overall growth of the Mexican economy, and you saw that chart where their manufacturing has continued to grow every year for the past 25 years, I believe that's a trend that's going to continue, and the Mexican economy is moving away from being solely a commodity-driven economy where they only export petroleum to a more advanced economy where they're exporting products and services. And so right now, I think EWW has a range that it'll trade in where there's fairly strong support above $40 a share and some major resistance at about $57 a share. So while it may continue to vacillate between those points, I think that ultimately, unless there's a global recession, the Mexican economy is strong. It will be moving up and to the right. And so at some point, it will break out above that resistance level. And I suspect over the next 6 months or so, or perhaps sometime in 2018 once NAFTA gets resolved, you'll see EWW, if not going back to its previous highs of 2013, it should at least get into that mid-range, which from today's price offers at least a 15% upside. So there you have it. That's just my opinion. I've made good profits so far this year on EWW, and unless conditions drastically change, I plan on holding it to see how far above that resistance level it can break out. Well, as always, thanks for listening. Don't forget to check out the full audio episodes of the Wealthsteading podcast. Until the next episode, this is John Pugliano wishing you the very best returns.